Speaking of currencies, the US dollar edging higher, moving above its recent 6-month lows. The Aussie is sitting at around 68 US cents. So that is a perfect place to join Peter McGuire from XM to discuss the latest. Peter, good morning. Happy New Year. Nice to see you. And I'm impressed you're here considering the weather outside today. I've just been looking down at my screen. I can't help but notice that S&P E-minis and NASDAQ E-minis have started 2023 on a positive note. Too early to read anything into those moves though, correct?
Well, I think so. And good morning and Happy New Year, Nadine. Lovely to see you. And greetings from the beach. So, yeah, I think Sydney is certainly enjoying a good time, and maybe that's washed across to those minis. It's a nice little bounce, and remember at this time of year it's traditionally fairly quiet trading, so it's a good sign, but it may be short-lived. I've just got to see how the rest of the week rolls past, and I think there's going to be a lot of interest over the next matter of months leading into this quarter, because there's a lot of macro themes that I think are going to play, and it's going to add a level of excitement that we haven't seen in quite a while.
Okay, so talk to us then about what we can expect this week, because yes, it will be quiet and it will likely be marked by low volumes, but we do have the PMIs. I mean, we saw them coming out from Europe overnight. We've also got non-farm payrolls, so it's not as if there's a total vacuum of information for markets to operate on.
Exactly. Friday night, we'll get those non-farm payrolls and how they're looking till the middle of December. That's when the read is. From it's the middle of the month to the middle of the next month. So it's middle of November to middle of December, and then it's reported the first Friday of the month, of the next month, of course, and that leads us to this Friday. So it's very hard to really forecast on whether we're going to see a lift up or just stay within the current theme. But I'm sitting here a little bit optimistic, and let's hope that there was some good hirings across the whole US over that period, Nadine, due to Christmas and retail sales and everything else. So I don't think the consumer's absolutely dead yet, but he's he and she are very wounded.
Yeah, okay, so that is obviously still to come. What we do know about 2022 is that the dollar ended on the back foot, equities ended on the back foot.
Sure.
Give us some context around the US dollar and what we can potentially expect in the first couple weeks of trade.
We're at 103.50, so that's for the US dollar index, and as we all know, it's weighted around about 61% to the euro. The euro sitting at around 1.0665. So it's had a very solid move to the upside as far as over the last matter of, say, 3 months, and that US dollar's come under very, very heavy pressure. Also the yen, of course. So those particular currencies have been the flavour for retail traders. I think they're all rubbing their hands with glee. So I wouldn't be surprised to see a little bit further softness as far as dollar index, Nadine, and maybe a 101 is conceivable over the next matter of a month or two.
Okay, so that's the US dollar in that context with the China reopening, with commodity prices where they are. What are your expectations for the Aussie in the short term?
Well, it's sitting at 68. I don't think it's going to be any real surprises coming out of that, out of the Aussie. I think it'll be very channel range. Maybe you might see a 69 handle and down to a 67. I think it'll oscillate between that. Still good for trading. When you see movement, and that's all we want, something to go up and something to go down, and try and find the best time to enter a market. So I think that volatility will remain. And as you can see there, it's been a fairly flat month in December, very range bound, and I think that will continue to probably the Lunar New Year for the Chinese. As your previous guest said, it is a little bit earlier this year, so it's about 4 weeks away till kick-off for that particular event each year. So yeah, I think there are other currencies to trade other than the Aussie dollar, Nadine.
Okay, now we know that energy was the big winner from 2022. We know, a lot of the reasons why. What are your expectations from here, Pete?
Up from here as far as price. So I won't be surprised. We're at $86 for a barrel of Brent at the moment. And I'm just looking here, made some notes. You're nearly at around about $80.25 for a barrel of WTI. I think both will increase, Nadine. I won't be surprised to take triple figures out maybe over the first quarter. So I think there's more upside for crude. And there's a lot of reasons why, and how that all plays are going to be an interesting factor leading into the inflation story. So yeah, there's there's a fair bit of market sentiment to keep an eye on, and overall, I think a lot of traders will be long over the next, say, 6 to 8 weeks for crude.
Okay, so crude is one that we will continue to keep our eye on, particularly as we are still, I mean, we're starting out this new year, still very concerned about recession in the U.S. And we get the quarterlies coming through, so we could potentially see some earnings downgrades coming from that. I mean, investors, it is quite a precarious time for traders and investors, you would think, Peter.
Absolutely, Nadine. I mean, let's not take our eye off the ball, and you've got to stay focused on the Nasdaq. We were sitting at nearly 16,000 this time last year. If any analyst would have come on and said we'd be now sitting at 10,300 or 400, then I think most people would have said, you need to have your head checked. It's been a massive wipeout. Many analysts are now calling for an 8 handle to be the new number to look at. Many analysts are looking at the S&P 500 to have a 2 handle in front of it, and it's currently at 3,800, down from about 4,600. And you've got some of the biggest investment banks in the world saying we're going to see the high 2s as the new handle for the S&P. So it could be a very, very troubling time to be long for equities over the next matter of months. And many analysts and many traders are saying now's the time to be short. And strap yourself in, because it's going to be one hell of a ride.
Well, I think that's where we'll leave it then. Peter, thank you. Nice to see you. And all the best for all of 2023.
Thank you. Cheers.